The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, for one more day as an exercise in trading stocks in the big markets. We've got nice pop, 27 points on the S&P higher, 2107. This is exactly where, if you've been listening to my show for the last couple of months, this 2108 has been the battleground of the highs and lows, and where volume basically would just fall off a cliff. And what we have today, it looks like that was at about 2101, and now we got up to these highs, and it just kind of ran out of gas. Now, doesn't mean that we won't get some more gas thrown on this at the end of the day, but I think we're talking about probably a pretty critical level at 2108 on the S&P, and see how we come up on that. Volume is a little bit better than most of the days we've walked in here. Is it huge? The answer is no. Is it better? The answer is yes. Well, we're not going to even call it 2.1 billion shares so far today. It is mild as far as volume. We've tried a few times to get to the 2108, pulled back to about 2104, so it's been extremely tight trading so far today, and we'll have to keep an eye on this to see whether or not the bulls have anything left to give. They are more than willing to do what it takes to try to keep this market up, but it doesn't seem like they have a whole lot left in the tank when it comes to pushing the market a lot farther. Anyway, we've got a lot of stuff going on here, so we'll try to get to as much stuff as we can, as fast as we can today. So we'll keep an eye on it for you.
And it's all just a little bit of history repeating.
On this day in 1752, Benjamin Franklin flies a kite during a thunderstorm and collects a charge in a Leyden jar. When the kite is struck by lightning, enable him to demonstrate the electrical nature of lightning. And I've actually seen the document over in England at the the Royal Academy of Science. I went through there one day and saw the original document where he talks about how to do it and how he was literally had the kite inside the house. Well, he had the string inside the house, and he had kind of trying to protect him from getting a direct hit from lightning, and the Leyden jar that he used. The Leyden jar was kind of the original capacitor where it would save up a little bit of electricity, and then he could watch it. But that's how he confirmed electricity was in lightning. And in 1752, of course, he was a big deal in the forming of our country, and a consummate overachiever. But this invention led to a bunch of other things. The first of all is putting lightning arresters on ships so that they didn't get hit by lightning and then instantly start to catch on fire and basically blow the mast apart, which was a common occurrence back in those days. So he basically figured out that he could put a big piece of copper up on the top and run a cable down the side of it and ground it out into the keel of the ship, and the ships could be struck repeatedly without fire or blowing apart the mast, which was a fairly common arrangement. And a lot of ships saw a lot of people die of thirst and hunger floating around waiting hopefully to hit land somewhere where they could build a new mast. But it was tough. Anyway, this day in 1752, electricity, which is bringing me to you today, was invented. So we'll keep an eye on that. Other things of interest out here in the market today, probably the most interesting is I saw an interview, and it really made me think of what, at least if you're thinking long term, what are the risks in this market? We talked a little bit about debt yesterday and the problems with debt, a lot of warnings. More than anything is the cost of borrowing seems to be going up. Last I looked, in fact, was to check in again here real quick. There's the 10-year. 10-year was pressing 2.5% earlier. Today it's 2.4675 on the last tick. And, we're probably going to hit, if you look at the charts, probably going to hit something like a yield in the 2.6s, I would imagine, the next few days. There doesn't look, if the charts act like equity charts, doesn't look like a lot to stop it until that probably 265 level on the yield. So we'll continue to have overhead resistance. That's why I'm not really worried about this market breaking out and making a huge run. The only thing I'm worried about is it taxing me out just before it fails. As I said yesterday, I'm a dedicated bear, but not a committed one. And I won't tell that story again. But right now, not doing too bad. Had a couple of stocks that bounced my way, so that did well. We are and did go 100% short. Well, it's a week ago. Still doing okay on most of them, or well within it, not being blown out or anything. I've got a couple that are probably not my best trades. Then I've got a couple that might be my best trades. So we'll be watching those today out here and see how they finish and develop. A lot of it's going to be how this market develops, because if they develop, if we get a nice pop into the close, then I suspect for the next couple of days we're going to see the rest of the world markets also push higher. So we'll be continuing to watch that. So we could get a couple of days. Right now, I suspect that the at least market participants really could care less whether what they're saying today is that this rally was on Greece. My guess is that they're rallying this into the FOMC meeting next week to double dog dare the Fed to even mention raising rates. But my guess is that rates are going up one way or the other, whether the Fed has anything to do with them or not. Anyway, the three big things we have are debt. We talked about that. Demographics, a lot of people retiring, which means that they don't spend near as much as when they're working. And, of course, they're taking money out of the system for the most part, not putting money in. And the other thing that's always out there on the other side, which I think we have extremely mild deflation, which is probably one of the reasons why we haven't seen a big move in gold. And I don't see that changing anytime soon. Gold was up $8 today, but this thing's just been flopping around these lower levels. And I'm more than willing to sit on my hands until I see some kind of decent signal that says we are on for a big run in gold, either up or down. Right now, I am agnostic, not an atheist, just agnostic. 1186.20 is the last tick on that. Silver rather flat, 1596. Platinum up $7. Crude, of course, the thing that we're really watching out here, kind of tried to get under 60 earlier, up 72 cents today. And I think that's one of the most suspicious ones that's being pushed here. It really looks to me like we could see 53, 55 on that fairly quickly if this thing rolls over at all. And, of course, one of the most important things out there is the dollar index. This was being pushed lower earlier. It's off 53 cents now. It was off, 70, 80 cents earlier. And not a lot of juice pushing it up and pushing it down. I suspect, but cannot prove, that we have some bigger hands. What a lot of people used to call, like Mr. Keynes, the invisible hand of the Treasury and the Fed and the EU, trying to keep a lid on the dollar and keeping it from just running away up to 100, which I think it would if everything else is going on. Of course, Greece, at least the reason that they're quoting it today for the bounce, it was a dubious issue at best. And of course, the other thing that's dubious is this is the day that options go delta neutral. And I always, on the day that they expire and the day that they go into Delta Neutral, I am the most wary of any news and more than willing to think that it's generally a big head fake. Again, we really want to be watching for the volume. I would say that to confirm some kind of uptrend in this market, I would be looking for somewhere between 3.5 to 3.7 billion shares on the New York Consolidated Tape. We've got 2.1 right now. This is where it goes quiet. If we get something like 2.8 at the beginning or at the end of the day, or 3.1 or 3, then there's nothing to indicate that we've had anything more than one more belch out of the collective gulp. I can't even say gut. I'll say it there. The collective gut of the market that probably could just use a little Tums. I imagine we're probably going to have this chop until we get into the Fed announcement next week. You can give me a call at 877-927-6648. That's 877-927-6648. And there's just one more piece of news, and then we're going to get into charts today. Apple, we talked about this a few weeks ago, and I think on the Friday show with Tom O'Brien, that Apple had been putting pressure on music levels to renege on their contracts with Spotify, YouTube's free music tiers ahead of the release of Apple Music, and that those tactics had already garnered scrutiny of the FTC and the European Commission, among others. Well, we now know that the Universal Music Group and others have been subpoenaed to testify and give any documents and testimony in front of the New York Attorney General's office. And kind of interesting that the feds weren't all over this, but they've been rather quiet when it comes to big companies that they like and rather noisy to companies that they do not like. But I have a feeling that Spotify's got a lot of people that like them, I guess, in New York, and the Attorney General actually doing something about it over there. What they've done, at least what they've been accused of doing, is not sort of illegal. It is 100% illegal, and there's enough people that reported it, and there was no denial that makes me think that there are bigger problems afoot with the Apple Music streaming service and whether or not this thing is ever going to go anywhere. Probably doesn't matter to the bottom line, but for a lot of people that were talking this up as a catalyst for it to go higher, probably not a lot there. Today doesn't seem to matter too much. Up $1.75 at 129.17, and again, this will just be sloughed off like Apple News and a ton of other things that they've done that haven't been successful. 2107 and a half on the S&P cash, 2.13 billion shares as we go to break. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we already had some emails here in the first segment. You can also email me at path@tfnn.com or call me at 877-927-6648 or post a message in the den. And what do we have out here? We certainly have a few stocks that are kind of peeking their heads above previous highs, but not a lot of love so far. Wells Fargo, we've been watching this one. It's been one of the weakest up here at the top for the financials, and we'll look at the XLF and a couple other stocks here in this segment. But what you really want to be looking at is this December 29th high, 36 million shares. Tried to get through it on March 23rd with 26 million shares. Popping up here today with 10.5 million shares. Not a real sign of impending breakout, but kind of the last gasp maybe on some of these. We've been talking about the Gartley pattern that's been developing in Bank of America in these. Now, one of the things I like about this is just the total lack of any true energy from this last low on April 1st in Bank of America. That is your C point. We're pretty much to the D point now. You have about 0.8% move up before I'd want to put my stop. Probably what, about 18 bucks? I'd say probably 17.99 or something. So you've got maybe about 40 cents of risk on this in a Gartley pattern, but the energy is off by a good 25% from this move down on April 1st. And if you were looking for a risk reward in this XLF, this is exactly where you need to be, and was one of the last segments out here. If you actually look at the XLF itself, it's going back and kind of trying to bust out a high. You could almost say this was kind of a nasty, ugly looking bearish butterfly today, but you went right up to where you pretty much should. And if you wanted to get short the sector, you could do it and just put in a extremely tight stop on these because you're going to be right or wrong very quickly on these. These are pretty much up at the very top end of what you could get out here. And again, not a lot of volume today. When we came up here before, there were 30 million shares and 26 million shares, about 29 million shares up here today. So a little bit. But I have a feeling a lot of people were a little bit premature in getting short on a few of these ETFs. And now that the market is going against them, doesn't look all that great. Other stocks, I'm going to get to all the ones. They had a lot of stocks. We were talking yesterday about the energy stocks, and it kind of looked very interesting to me yesterday in that they probably were ready to start bouncing. But we've got some other ones that are interesting also. And a lot of people have been talking, or maybe 3 months ago, started talking about Yamana Gold out here, and I just never did like it. That is because this is really what you should be looking at in AUY. If you're looking for some kind of long-term low, this is exactly what I like, and that is that you get 3 subsequent lower lows. In fact, we needed about 2 cents yesterday, but I don't think we had enough volume. Probably going to get it in the next few days out here. Now, this is either going to have 0 volume over the next few days and be a great buy down at these levels, and or it's going to blow through these levels. It is below what it should be, the November 5th low that had 25 million shares at $3.45 from 2014. Tried to get into that on March 11th with 13 million shares. Yesterday with 9 million shares. My guess is that we could see a couple of days out here and even a busting of that 333 low, although you don't need it because really it's that 345 that you're keying off of. So we are below that 345 level on here, and you want it to close back above that. But you'd like this thing probably to go sideways for a little bit. But you know, if gold did turn around, this would want to be one that I'm looking at, as it certainly looks like interest is severely waning in both buying and selling it. And that's a good time to be buying gold, and that's when no one cares and no one's talking about it. And still probably too much discussion on gold, the metal, but this stock may be coming in for a soft landing. And you could have some nice, at least percentage-wise return just on a bounce back up to 422, 420, 450. This thing could probably do fairly well out there. I don't know a lot internally on it, but it doesn't look all that bad long-term. It just needs to have all the energy. And, you know, today's not a bad day for this thing out here on a very short trading or small trading range with 2.6 million shares. Really has me thinking that at least a few of these stocks may be lining up. We're going to break. Give me a call, 877-927-6648, or email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back, still treading water at 2107 on the S&P cash volume is not picked up. It's always kind of quiet during this hour. 2.2 billion shares. Again, probably looking for something in the neighborhood of 3.2 by the end of the day. If we're going to go take out highs, at least today, maybe we get volume coming in tomorrow or the day after. But right now, volume kind of tepid for the last 30 minutes with 2.2 billion shares, right at what is fairly significant volume, that 2108 level on the S&P cash. Other stocks that we were talking about energy yesterday, and a lot of these stocks look like they were ready, at least in the energy sector, for a little bit of a bounce. January 14th, $42.92 in BHP, and it went below it. It is now back in the trading range out here. But 3.4 million shares compared to the 5.5 million shares of January 14th yesterday, and we're popped right back into the trading range. So not a lot new on that. CMG also had made a little signal out here. We can get the internet to cooperate. There it goes. This one had finally come back to the monster gap up that it had on, what is that, June 22nd of 2014. 2.2 million shares, got into it with fairly light volume. This thing not really moving extensively out here, and I suspect it's still an issue with the food and food costs for CMG, and the whole idea that they can get enough food to prepare that is not genetically modified. Yesterday, we had a nice conversation with somebody in the den about that. And it's just hard for me to see that everything isn't genetically modified. Got a question in my short-term outlook on crude. I think that it could go back down to 55 or 53 pretty quickly. I think we're just in this bigger trading range. I don't see anything short of war, and it doesn't look like we're in any mood, or at least the current administration would, it's got blinders on. It's not going to look that way. So short of some kind of war going on in the Mideast, it's very tough for me to see that crude goes up any higher. Basically the drawdowns have been 6 million barrels or something, pretty light. And I suspect that we will see, with especially the unleaded price going up a couple of nickels, I suspect that's going to put a lid on it. A lot of people, I think, are just looking at crude as a vehicle to be in case something bad happens. And it looks like it's going to be a quiet summer out here, less any big fireworks come out of the Fed next week. But I'm thinking that's about it. I think we're in some kind of range from about here, about $61 to $53. 55 looks a lot more doable, and it's just going to be a quiet trading out here. But my guess is that the airlines are telling us a little bit about demand, not only the price of fuel going up. And, if they're going down, I'm figuring that we're probably going to see weakness in the broad markets too, even if they've had a respite today. Anyway, Chipotle, however you sell it. I don't go there, so it doesn't matter. But I digress. CVE out here. We were talking about this one a little bit yesterday. Wanted to check on it. 7.4 million shares in the first low of December 16th. 1629 on March 16th with 2.1 million shares. You get one more out here with 1.7 million shares. And a nice little bounce up here today. It's a little doji out here. Now you're probably going to go into some kind of consolidation. The only thing I dislike is the energy up from that March 16th low to the April 23rd high had about the same energy all the way back down. Didn't have a lot of volume at this low, which just makes me think that you're going to consolidate out a little bit at these levels. Other stocks of interest, DPM, another energy company out here, looks like some light volume, but this one's holding up, at least at the moment, below the previous lows. You basically were looking for anything less than 800,000 shares on the January 29th low, and you got a little bit of that, 560,000 shares on March 13th. You bounce back up. You even have a high volume high out here, and you're back down again on some of these that just look very tough. And of course, if you dig through these, you'll find out the ones that have a lot to do with fracking and or oil shale still are under heavy pressure like this one, even though some of the other ones have bounced. Easy Corp. This is a chip manufacturer. EZPW. This one made a high volume low of October 7th in 2014, $8.25, 3.5 million shares. Pierced it on May 1st, pop back up, come back down in there to retest this high volume tick, and it's back into it with about, a little less than 1 million shares yesterday. Still no love, which may be telling me that we still have issues out here with stocks, or a lot of stocks. Very narrow leadership, let me put it that way. Up at the highs, Amicus Therapeutics got another one out here testing a high volume high, and that's the March 19th high at $13.20. FOLD is the symbol on this guy. We're through it today with basically no volume, 1.4 million shares. It's back in the trading range out here. So not everything is sweetness and light in all these stocks. General Growth Properties, one that had some decent volume on May 7th as it made a low in at $26.63. GGP is the symbol on this one if you're not watching on TV. 3.1 million shares yesterday. little pop today with 2 million shares so far, but not a lot of energy on this one either. And again, a lot of these stocks have about the same energy up as the way that they have down. And that means probably less of a V bottom and more of a U bottom, as long as they don't break those lows in the coming future with higher volume. Another energy stock out here that looks like maybe this thing could be making some lows, and that's Gulfmark Offshore, with some fairly light volume down here at the bottom. GLF is the symbol on this guy, and we've got a 670,000 share low at 1280 going back to March 27th of 2015. Got into it with about the same volume. You get a bounce, goes up to May 6th at 1643, comes back down here, busts through that previous low. But you really, the best day you had was 650,000 shares. So it was about the same as that low. But now that we're going sideways out here, volume has remained low for 5 days. We got a little doji out here today. Again, probably more indicative of a U bottom if you were thinking bullish. But you're going to want to give this thing probably a few weeks out here at these lows to consolidate out the bottom. You don't know. Hancock Holding Company, HBHC, is trying to break out today, but pretty light volume. If you compare it to the March 12th high at 1.5 million shares, or the April 15th high at 888,000 shares, we've got about half that today with 400,000 shares. And it just looks like it's going to be incredibly tough for this thing to break above with any kind of sign of strength. And most of these have just been popping back into the trading range. Other things, Horizon Pharmaceuticals, HZNP has made a nice little double top out here. Again, this one did it with a fifth of the volume. April 21st, you had $32.15 with 10 million shares, went into it on June 8th with 2.6 million shares, 25%. It's back into the trading range. Real interesting to see the energy from the March 26, 2015 low up to $32.15 on the April 21st low. When you got your pullback, you just didn't have any energy from May 14th up to the high 2 days ago on June 8th. And now we're just kind of floating back. Most likely this is probably going to float back down to about 24 bucks, which is where this thing really started taking off with the nice volume gap up on, March 30th with almost 14 million shares. Other stocks of interest out here, Infinier, INFN, has been trying to break above with no energy. This is the April 22nd high that I'm talking about, $20.93. You basically get into it with about half that volume, and you've just been going at it with very light volume today, 642,000. Just not a lot of impotence to go out there and be a trailblazer. As they said, the pilgrims get the arrows, and no one wants to be that pilgrim, at least in that stock. News Corp, NWS, this thing's finally come back to what has been support, which is around that $14 level, with about 2 million shares. Yesterday we had 1 million shares. Nice little doji out here today. You'd still like to see this thing probably go down to the 1409 October 16th, 2014 low. But at that point, that's about all you could ask. Not that much farther. This doji yesterday probably indicating that we're probably fairly close to some kind of low on it. OUT, Outfront Media, and I think these guys do signs and stuff. This one, a little tougher to make a big case on. Energy was strong a few days ago, almost 2 million shares, but down at these lows, it's kind of dried up. May 12th, $26.78 with 820,000 shares. Yesterday, 570,000 shares. A little doji out here to go sideways for it. Again, not a huge theme out here other than a few of these stocks at highs with very light volume. Prothena Corporation's PRTA, this one not ambiguous at all. 6.6 million shares on the March 20th high, $45, went to $46.69. It's starting to pull back into this range, and a close basically below 45 bucks. It's going to do that today is a major sell signal in the stock. And looks like you're probably in a big range on this one, maybe down to $30 in a trading range. And could be very interesting in this one, too. I don't know enough about this company. Let's check them out very quickly. If you've got any questions in the den, go ahead and place them. Also, if you have an email, be like Kay, who wants to look at the IWM. We'll try to get that in here. Prothena, late-stage biotech company focusing on the discovery, development, and commercialization of protein immunotherapy programs for treatment of diseases that involve cell adhesion and based out of Ireland. So this just doesn't seem like a lot of energy back up here, back up these highs. But I do digress. IWM, let's take a quick look at that. Basically, we're back in, and volume not as bad as you would think out here. I know a lot of people had been short the IWM, and it got down to 120.24. I think we made $3 or $4 on it in the newsletter and had to get out of when it bounced back to 123 and changed or so. I think we were short it like 126, so we made a few bucks on it. It's come back up. The energy has not been anything. You get a little decent day today as you get into that April 15th high at 127.13. But to me, this thing has made enough tests at this high with lighter volume that you really don't need anything after today. It's in that candle. There isn't a lot. Could it go higher? Yeah. Is there a lot out there? No. Is it giving any kind of indication that there's a lot to push this thing out and above the previous high? No. Probably just more of a trading range back to 120.24 to test that May 6th low soon enough. Hopefully that helps you out. To me, at best, a trading range. At worst, this thing is just built cause to go down and break that 120.24 for May 6th. Rackspace, nice little move all the way back to this sign of strength that goes back to November 11th in 2014 that basically gapped up with 13 million shares. We've been back in this thing with 2 million shares on the 2nd of June, and we're back in today with 600,000 shares. Not a lot of impotence to sell, but of course this thing's off $56. But at the same time, like a lot of these stocks, it looks to me more like a U bottom than a V bottom, if it's a bottom at all. And I would be very wary of those unless you see a couple of weeks of this thing just going sideways with a very light volume. Hang on just a second. I think I had a bug trying to bite me. But how rude. Sony out here, nice little pop. Let's check back in. Oh, guess what? 2107 on the S&P cash, 2.3 billion shares. So a whole lot of nothing, as the guy from Shark Tank said. A nothing burger, at least a nothing burger for the last hour. Sony Corporation, this thing had come to this huge gap up in a way that it had on the 6th of April. That volume wasn't huge, but we got back in it. Gapped up on 2.5 million shares yesterday. We had 1.5 million shares. Nice little pop-up today, but no volume today in Sony SNE. We'll be back. So you still have plenty of time to email.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got some losers out here today on my Walking Dead list out here. We've talked about these stocks forever and how they can financially engineer these things going sideways and sell them off to unsuspecting rubes. But we know better, don't we? Sears Holdings, we've all known this thing was going to blow up one day. The last 4 or 5 days is probably tell you everything you need to know. But of course, because you've got 50 and 70% short interest on stocks like Shield, they can continue to run these things back and forth. As long as you don't sell, it's hard for a stock to go down, whether or not it's worthless or not. The question is, eventually, someone blinks, and it's either the longs or the shorts. When the case is so good that you get the big timers on Wall Street shorting your stock, they don't blink easy. They don't scare easy. And they just hang on, and that's why Sears Holdings has had a short interest of above 50% for forever. Everybody knows it's going bankrupt. Everybody knows it's following the same path as Radio Shack, and probably from the latest numbers I saw on another one of these Walking Dead stocks, which is BBRY, right? BlackBerry? Yeah, that's what it is. BlackBerry, you're going to see the same thing on this. It's going to walk into earnings one day. No one's going to expect it. It's going to gap down $3, and then it's going to circle the drain, and that'll be it. And it'll circle the drain for 6 months at $1. In the meantime, they'll continue with all kinds of stories of how this thing is going to be coming back. But it went from 3% market share 3 months ago to 1% this week, and it's going to be that. One of the local Kmart's is now being turned into a car dealership. This, probably the biggest thing that I have to probably have a gripe with is Kramer. And when Kramer first started his show, he started screaming about how this thing was an enormous buy because it was a land bank. Of course, he was blowing everybody else into the giant bubble that was the real estate bubble into 2007. In reality, we all know that all these companies have to do is basically selling their internal organs. Whether they're selling their kidney or their pancreas or their liver today, they are basically selling their future out. And, I think probably the nicest thing is we've heard this kind of claptrap and horse pucky again this week, and traders pretty much understanding that it didn't hold any more water than Sears have ignored it in a few of the stocks that they've tried to pass this lie onto. The problem is some stocks just aren't coming back from the dead. Maybe they got their heads chopped off like on The Walking Dead. That's the only way to kill them. You know why? I think you have to either get into their brains or cut their head off. I don't know. I'm going to have to watch it again to make sure. I don't know the rules of zombieism. I know the rules of zombieism in stocks, and all you have to look at it, Sears out here, and that's about it. This thing's going to blow through the $24 level, I suspect. When these things give up the ghost, they give up in a hurry. And, of course, Wall Street is not in the mood to lend you any shares when these things finally crack. If you were lucky, maybe you got some options on this thing, probably the only way to play it. But a lot of these stocks not feeling the love today that the rest of the market's out there. And guess what? We're at 2107, 2.36 billion shares of volume. We'll see if anything happens in the last hour, but doesn't look like it. In the meantime, hang on for Tom O'Brien. And as always, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.